clear? Can you all see my screen? Can you all hear me?
Loud and clear.
Wonderful, wonderful, wonderful. Right, so just want to look at some synthetic pairs so that we see some of the major opportunities that are available currently, right? So I have step index here, which is the first pair that I have. And we actually also took a trade last night. We took a buy, actually. I gave the buy publicly in the public WhatsApp there. If you also check the public Telegram, it's also there. Right. So step index, just a quick rundown of what's going on. You can see there we broke major structure there. They also let me admit this. Okay. So after doing that, breaking major structure to the left, as you can see there. We also did some structure shift here up, and then they also broke structure down here. Right. So the last time that we did a webinar, I did actually ask most of you guys to say, can you kindly confirm if ever the weekly is also closed below this leg, right? Below this low. That was the most important thing that we needed to know right here, because if ever they change character like that, based on those on that, if ever they've changed character up there, they mustn't come down and break here. So that can potentially just be a fake out. If it's a fake out to the downside, it's also still going to be a very good opportunity, because it means now any trades that are going to take from down here, our major target, one of our major targets is all the way up there to that swing leg up there, right? So looking at where we are, looking at where the market is, the most two important things, or the most two important moves that have happened there, where the shifts that have happened there. If you notice here, if you zoom in nicely, you realize that as we're coming down like this, right, structure was basically respecting bearish order flow all the way to the downside. There was no shift to the upside that literally happened. Then around here, that's when they started to have some shift. They shifted like this the first time. Then they came back again to the same zone where they shifted, and they didn't break it, which was actually a good. That was a good sign there. Then they actually now shifted also here to the upside internally here when they took out the main shift. Actually here, it's actually right here, something like this, right? So that double shift that they've done, that's why we actually, the buys that we took, I'll show you exactly where the entry was and where exactly I'm expecting this market to go. So from where the market is right now, our first target is this high point here. If they come there and they don't break it, it just means they can just play around within that whole consolidation. But obviously, that's our first target. Of I'm actually strongly anticipating it to be taken out. Someone can also draw some supply areas here. As I said, if this is just a fake out to the downside, like here, definitely they are going all the way to the upside to that level up there, right? So it's going to be a very good trade if ever it really flows in that way. It's going to be a very good trade. So along the way, you can literally see that there are some supply areas like here. That's a supply, that's an order block, whichever way you want to call it. And potentially on that zone, we can have a slight, what do you call this? A slight reversals. If ever the market wants to reverse, sometimes they usually prefer to reverse on zones like that. There's also this other one that is here. So both these two, one of them, or even both of them, they can literally be used as reversal points for our move. Because remember, even if we will be going up, they go up respecting order flow. They go up respecting, they don't go up in a straight line. They can go up still respecting order flow, still like something like this. So having done all of that, as I said, this was the shift to the upside on the daily, this one. So this shift is the confirmation that we currently have right now to say we are going to break this level here, or we're actually shooting all the way to the upside to that level. So after having seen that daily shift like that, the most important thing is to identify my daily levels. Or here you can see that that's a demand, right? That's a demand. Those that are in the mentorship class, they're also aware of the idea of ranges, whereby you can actually identify your buying range within that hole. Was here after taking out this after shifting structure to the upside like this, they always create a buying range that you need to just you need to just know. Once you know that one, you definitely will identify your entries within that whole buying range. So in this case, my buying range, I can safely say it was the highest point of it. The top of the range is literally that high there, and this is the bottom of the range like this. So something like this. This is what we are currently. Let me just write this a bit. Top of my buying range like that. Then this one is the bottom of my buying range. So bottom of my buying range like this. Right. So having done this, I've done this is a complete analysis on its own. So from where the market is, our first target is this uh high right there. From there, we are anticipating the market to push into this supply area before any major reversal, right? Before any major reversal, we're actually anticipating the market to push into this one and that one. So the only reversal that we can have, it can come maybe from this supply area. Because looking at, if you are going to describe this in structural form, we can literally say that was a lower low, lower high. That one is not a lower low, but same low. So if they do this, that will be a change of character to the upside. So once they do this, then they can now even give you a slight pullback to any level that they would have left behind or whatever. Then they continue up until potentially if they break up, they're beautiful because it will also be in confluence with the whole idea that this is a potential fake out to the downside. So it's a very good trade, very good trade. That's just all that you need to do at this point is basically to monitor and follow through the trade very well. Those are trades that you actually don't jump out of such trades just like out of feelings or out of emotions. Even all the trades, actually, you don't jump out of feelings and emotions. You basically use analysis. The same way you enter a trade is the same way you exit a trade. So that's the level there. And if you look at my buying ranges, literally here, and if you look at this point here, they were coming down, coming down, coming down. Then here they actually shifted to the upside. So that on its own was also a good confirmation to be bullish, even when they came back with this candle to pull back and tap there. There was also an entry that one could have actually caught, just even using the 8 hour there. Let's go to the 4 hour. See if there's anything to just take note of. There's literally nothing interesting right here. So right here you can see already this level has been tapped, so there's nothing left to come and touch right there. So our entry now, it was based on, let me just remove this, or let me just put it like this. Okay, let me just put it like this. Let me go to the 1 hour and show you where our initial entry on the buys, it was literally around here. It was literally around here. So even if you look at structure here, you can literally see that's a high and that's a low. That's a high, higher low. And here they failed to literally, if ever you have an understanding of institutional language, what you guys call an inducement. So they literally failed to necessarily induce or shift structure to the downside here. They were supposed to take this low. That was our inducement. They failed. They came here. They also failed. So here, this move was holding all these candles. So literally, you can say throughout there, it actually failed. Then right there, that's when they now did a pullback to take out most of those and actually finally induce. So that inducing like that is making this a higher high. And this one, because we've shifted up, that's now our higher low. So this is just additional information to the whole movement to the upside. So right here on this level, of which I was actually eyeing this demand right there. That's where we actually got our entries from, right? Which is this higher low point. Because if they broken that higher low point, it wasn't going to make sense anymore. It was going to be a total different situation. So right there, they did the shift to the upside. I think I gave the signal when the 30-minute actually. I think I just waited for 30 minutes. I didn't necessarily wait for 1 hour. I just waited for 30 minutes. I think it was let me do this. I think it was around this level and also this level. So literally the signal personally myself when I saw this obviously I jumped in, but then the signal I gave it around here. When we broke above here, that's when we gave the buy. So when we gave that buy there, the stop loss it was just slightly below the whole zone there, which is below just I think it was on 8,000 there. Straight 8,000, somewhere like yeah, somewhere here. Then this is not where my TP is. If ever you noticed the signal that I gave. The TP actually, the first TP is actually here, which is that high, which is our first target, like this one. Then the second one is actually all the way up there. So currently we are still bullish. And if ever you really entered exactly on the same point that I gave, or the same time that I gave the signal, you definitely now can even shift the stop loss to even to break even, because they've already came back. There's literally nothing else to come back for. And also here they've actually created new structure to the upside. So there's no way they'll come back all the way. Yes, in as much as they can do that, but there is no reason, there's no strong reason to even come all the way back there to that same entry point there. So either they can just put and break even or just slightly below like this. So now the only pullback that can happen is maybe to this, because right here also you can see that when they did this pullback, they now also needed to shift up. So here, right here, they've tapped already that one. So they can come for this. They can come for that level. They can just pull back to this level or even that one. Then continue going. But mainly our main entries, our first main entry was this one. Our second one was literally right. You could have even bought even here when they closed above here. You could have even bought again there. So now the third one, maybe it can come here, but even if they don't come, you will now just need to follow through on structure properly and see how structure is really playing out, because you can't just jump in because we said we are bullish. You can't just jump in anyway. You understand? So basically, this is how we got the whole buy entry on step index. This is beyond the things that most of you know. Most of you just understand trend lines, you understand support and resistance. But if you paid attention, I never spoke about any support and resistance throughout because those are just what do I call? Those are big when you're starting to understand market structure. Yes, you're introduced through those terminologies and stuff. But as you go deeper in understanding, you realize that there's actually more. So yeah, that's why you can potentially have our pullback there. But nonetheless, those that are still in, you can still hold on to that trade for a very, 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 very long time. A very, very long time. So yeah, also the same thing. So yeah, on the 2 hour, that's where they actually reshifted to the upside here, right? So the pullback, as I said, it can just come maybe here. If it comes there, it's not violating our bullish structure. It's just still obeying bullish order flow. So potentially they can just give that pullback before the overall coming and taking out those other levels and stuff. So that's basically the whole entire step index analysis. I think I've fully analyzed where we are, where we took our entries, and where we are actually heading and where we're actually anticipating the market to go to. Looking at structure here, as I said, our first target is we're looking at that. Then once we break there, we're looking at that supply area there. From that supply area, that's when maybe they can give a slight pullback before a potential continuation. But nonetheless, so far we're still holding to this. Once they break there, so even when you put your TPs, you don't necessarily need to put that TP. You can put it just for analysis sake, whereby because most of the times they'll come if they are coming to break this, they'll break it actually. So sometimes it's not a wise thing to allow the market to take you out on a trade that would continue going up. So the best way is just to put it maybe up here on the supply areas. Then once you see structure shifting to the downside, you can even exit. Those in the class, you are aware that the same way you look at structure, the same way the same way you look at structure when you're entering is the same way you can also look at structure before you exit the trade. Right. So step index, that's the whole full entire analysis. Nothing much to complicate things. That's it. Then let's see if ever let's look at another pair. Let's look at Boom 500. Boom 500, I also have a very beautiful setup there. I also have a very beautiful setup. So Boom 500, the last time I gave you guys a public signal on Boom 500, the market was up there. Up there. It was actually in around May or so. And look at what happened. I think also our TP was literally somewhere around here. And it actually kept going and going and going again. So looking at the overall picture of Boom 500, you can literally see that we've been going up for a very, 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 very long time. And even the going up there, you can even mark some major swing legs like that one. Even here to the left, you can even mark. This will just help you to understand what's happening even on the higher time frame picture. So that was the major change to the upside. Then there was another swing higher high. There was a swing higher low. Then we broke structure there. Then this was just now internal structure to the upside, internal structure to the upside. This one. So this was just internal structure to the upside, of which these are just a continuation of buys actually. So now this is a major swing leg because it actually changed character right here. The same way we changed character. If you look at this structure here, we literally changed character here because here there was an adjustment to the downside. There, that's where we broke. Then there, that's where we changed. So that was sort of like a change of character there. So there, we now have that as a swing leg. And potentially they can still come down, but before the coming down, they can just give us a slight pullback to the upside. So there are two possible scenarios currently on Boom 500 that I have. Is the first one obviously is the coming to any supply area like this one or even those other ones, then keep dropping to certain sensitive zones before the overall continuation up, right? Then the other scenario, obviously, it would to be maybe just to keep going and break without even coming to those levels down there. So there are two possible scenarios. If they're going to come down here, I can see there's a very beautiful demand area there that they can just come for because that one is very clean. It wasn't touched. The last time that it was, they actually came from there, never came back to it. So that one's also a very good. It's actually in isolation, which makes it more good for them to come back there before they continue with structure. Right. So looking at where we are now, or even up here, just to mark some levels where the market can potentially come to. We have this, I have this supply area here. There's also this one, but when you have zones like those whereby you have a supply and up there, there's also another one. Most times they'll just come for that last one, which is above the other one. So potentially that one, they can just ignore that one and tap there. Here they tapped already, so there's nothing interesting there. Here they can use this maybe for a slight pull back, maybe to just tap there, maybe give a small reaction before something like this. If they decide to turn from there, it's also still fine. We'll turn from there. So this is my current bias on Boom 500 on that particular level where it is. So in this case, the most important thing now are these details that we have right now, which is here. If you look at here, they literally tried to shift up here. They tried, but they failed. Then here, they broke, I believe they broke the law of that one to the downside. Then eventually so that's the main shift that happened there. What they were failing to do, even as they were coming down. If you look at the market as they were coming down, you can see that bearish order flow was still intact here. They tried, but they couldn't shift. Here they tried, but they couldn't shift. Here they tried, but they couldn't shift. Then here they tried, but they couldn't shift. Here they also tried, but they couldn't come back to the previous high and actually shift there. So here, this was my last lower high actually. And they created they actually broke there and created this one and also broke that one also. So eventually we can say somehow our level is literally around here. The overall change of character, you can call it a change of character, which is correct. to that upside. So they've changed. Once they've changed like that, they created those new highs. And now the most important thing is basically identifying our buying ranges, that low and that high. That's basically our buying range. So within that whole level, they can literally, that's where you're basically looking for your buys. So where they are, they're actually on a very, very, very good level. Looking at the daily, whereby they've already pulled back and they've tapped this demand area right here. They've tapped it on the daily, which is good. So does it mean that they are flying now? That's where you now need to go to lower time frames now to see all that information. So that's the purpose of going to the lower time frames. One of them is to get those sniper entries that have lead to no drawdown at all. That's the purpose of the lower time frames. But lower time frames, they don't necessarily. If you look at lower time frames, the way they are, they always at the end of the day they'll always align themselves or realign themselves with what the higher time frame would have said. So there's nothing that they would do in contradiction to what the higher time frame will be saying or doing. So right. So yeah, I believe it's much more clearer because on the 8 hour, it's much more clearer. That was a simple break. They broke there after breaking there. And even here, you can see that they tried to shift. If you notice here, right? They had broken this level here or broken structure to the downside there. Then they tried, but they couldn't. If ever they changed right there, they were actually going to pull back within some level. They then keep flying, but they failed. But then after failing, they came back again and they broke here. After breaking, they eventually succeeded right there to change the character to the upside. So them changing character to the upside like that, it's basically buying opportunity. So yeah, in this case, they were literally the main entries that were available. So on the 8 hour, another thing that I can also pinpoint is the fact that the most important level on the 8 hour is this demand. If you look at this zone here, if you look at all these candles that are within this zone, right? There's always that one main candle that will be holding all the others, which is this one. In this case is this one. Tail this one and tail this one, tail this one, tail this one. So ultimately, that's the level that we're eyeing to the market to actually pull back until before the overall push. So that one is actually our buying zone. This one, I'm going to share it as well. I'm going to share the buy. I believe it will be there. Maybe tomorrow. I don't know. Tomorrow also, but maybe tomorrow actually, or in the AMs, depending on how fast it now drops. But it will actually be somewhere there. So once we buy from there, we can actually obviously someone is looking at the top of the range, but obviously we're anticipating it to be broken. So this will still be our first target. So once even after they tap that target, you're not necessarily coming out, but you're basically observing structure to say, structure wise, is there any change that has happened to structure? Is there any shift or has it shifted to the downside or is just still pumping to the upside? Because zones, those in the class, they are aware that zones, they are irrelevant if your structure doesn't change on the zone. So even here, as they are coming, the most important thing, even after they've arrived on the zone that you're anticipating to buy from, right? Obviously, remember, there are also entries like risky entries. A risky entry is an entry that you can enter before that candlestick confirmation. That's a risky entry. It's and also another thing now, if you mature in terms of understanding, some of the things that we call risk, they are risk because they are risk to someone who doesn't know what's happening. Risk is only risk when someone doesn't know what they're doing. But once you grow to a level of understanding of knowing what's going on, certain entries that people term risky entries, like this one, right? Someone might say, hey, let's say it arrives here and someone just buys instantly without waiting for that shift. Someone can say, you entered a risky entry, right? I'm just giving an example, which is also a good precaution, but with understanding as you grow in the game, you realize that some of the entries that people call risky entries, they cease to be risky entries anymore because you'll be so much sure that if the market does like this, it has already made the decision here to the left. So we're not coming there to entirely make a decision of going up. We've made it already. It's different from this point whereby the buys, because in this case, there were buys that are available from this level going up until we started to 10. Then when we started to 10, in as much you could have also taken sells. I will show you exactly on the lower time frames. Those two major entries, the buy and the sell, Then here, obviously, you're anticipating the buys again to the upside. So that's my main bias on Boom 500 currently. A bullish bias, a bullish bias, a bullish bias. So they can even stretch into this. They can even stretch into this level here. If they stretch there, it's also good because uh you actually get a very beautiful entry also somewhere around there. Like this. Stop loss will just be below there. Right. So looking at the entries, if you look if you look at this side of things here, this side of things they tried to shift up here, but they failed. They couldn't take out that previous high there. Then they broke here. After breaking, they broke again there. After breaking, they now took out some highs to the upside, which was the shift to the upside. So there, I can say our main shift here was literally right around here. If you go lower, you also get it. You also see more clarity on it, right? If you go lower than the 4 hour, but that was the shift. They shifted up, came back for a pullback, shifted again. So that is where the initial buy was, and it actually kept respecting structure, respecting structure. It was still bullish throughout the entire time. And by the time they get these new highs, new lows, already you can protect those initial trades that you ended up there. Then when they turned, they actually turned around this level. That's why they now tend to be bearish. So when they tend to be bearish, they even if you caught sales initially, they put stop loss above, then they came back again, they turned again. So it was just still in the same zone. That's why there are entries that, let's say someone who sold initially there, then they go like this, then they come back again to their entry point. Let's say you'd shifted stop loss to break even already. There are entries that sometimes even after being taken out on a break even, you will still need to re-enter them because the structure would still be the same structure that you had predicted initially. I've seen most people whom after they are taken out like this, for example, let's say they take it out on break even. Sometimes you can find someone actually changing the whole thing, the whole bias that they had initially. You find someone changing and say, I think it's now buying. You think it's not buying what, but structure is still within your bearish, or within your selling range. So certain entries like those are entries that you just need to re-enter even after you are taken out on break even, right? Right. So yeah, we're just waiting for the market to come here. Then we strike buys. I actually had a sell entry around, where was it? I think around here. Where it's dropping now, I actually saw a sell entry. Officially, I couldn't give that one. I just I couldn't give that one, but I actually wanted to give it, but I didn't get I had actually a pending order around there. Then it just triggered. Then I just came back and saw that it's already in. But nonetheless, from there, I'm just expecting the drop into this zone. Once we're in this zone, that's our buying zone. Very, very serious buying zone that I'm actually anticipating a very, very good move from that whole zone all the way to that supply area as our, even here on the 4 hour, you can even stretch it all the way up there because it means somewhere there, that's where we might have a potential reversal of that major supply up there, somewhere like something like this. So even after they tap the zone, the structure shift, which is something like what happened here, is very, very important. Very, very important to avoid being a victim of fake outs. Because sometimes I've seen entries like those whereby the market, even if they know that they're going to respect that zone, they'll come to your zone, then they fake out. After faking out, then they'll shift, then they go. So that's why the shift is it's a very important piece on your entries, the shift. Most of you have just been taught about levels, and the reason why you keep, even after you draw certain demands, certain order blocks, whatever zone that you've been taught about, even after you draw them, you still experience losses even after you draw zones. So yeah, that was the shift to the upside. They shifted up here. On the 1 hour, it was literally somewhere around. I can just put it like this. They shifted up, made a new high, came back within our buying range because that was now a buying range from that low to that high. That was now a buying range. Then they literally came to this demand. Even after tapping that demand, the shift to the upside, it happened. So in this case, there were two entries, as I said. You could have entered a risky entry immediately upon them entering this demand. Okay. or someone could have just waited for the shift. The shift in this case, it was literally when they took out this high like this, of which on the 30-minute, they actually took it earlier. So they literally respected bullish order flow, bullish order flow, bullish order flow, all the way up until that point that I marked where they turned. So they turned there. So even after turning there, so it means here, even if you went to 30 minutes, you would have gotten an earlier entry. Let's say you waited for the 1 hour to close. It means you're going to buy around here. Your stop loss just below here. Obviously, in this case, structure was still bearish. This was going to be your first target. And that target was just there along the way. You're basically observing structure to say, if ever we turn, even before we get there, you exit. But they never turned to show you that they're wanting to change that character. So the only time they turned was up, up, up there. So this trade, you would have literally held it all the way like this. Then the sales also, they started from there where we turned. Where we turned around here. Immediately upon that turn or upon that shift to the downside right here, you would have sold here, right? You would have sold there, stop loss above the level like that. Your TP, obviously, you are targeting potentially this demand area, this extreme demand like this, right? Then, as I explained, that there are other entries that even if the market does come back to your entry, they will still be going. Sometimes the purpose of just coming there is to tap some levels. For example, they came back to tap this demand, this supply area here, right? They shifted, came back and tapped that supply area, then they dropped again. So even there were so many other entries that were available, even for someone who was not in also by that shift to the downside, which happened here. One could have also sold their stop loss above. Then ultimately, they just kept selling and selling and selling here. That was just internal structure there to the downside. They broke that structure, blah, blah, blah. Then they were now just doing pullbacks within structure. This is still bearish structure, remember. That shift to the downside, already they've shifted and they're now bearish. They're now bearish, they're now bearish, they're now bearish. Then something like this. So even after they did this pullback, let's say you were in sales from there. Here by that shift to the upside, you can decide to exit because obviously someone will actually be in good profit by that move. Then here that was a continuation and they took out that low continuation on that supply area right here. That's why they literally now turned to be bearish again. That was a continuation of sales. So that was still a sell there. They broke here. Then here also they gave another simple structure to the upside. Here they tried to shift up, they failed. And then here they did went up and they came down, they went back up again. So roughly on that zone, they literally rejected on that zone. If you go to the 4 hour, I believe the 4 hour is much more clearer there. So had they taken out that level, they were going to do something else then. The market was basically going to fly from that level. So according to the principles of the rules of structure, of institutional structure, they are not supposed to close because they fully closed. Yeah, that's not a full close. A full close is mostly when the majority of the body is up there. So that one we don't really consider it as that because if ever we had access to the 3 hour, I could have shown you that that's not even a close. So yeah, they broke structure here. They came back to the same highest point up there. Then they couldn't break it. So that's where the sell idea on that zone came from. So right there were sales there were sales even here. There were also sales that were available on that zone. So now we're just selling into this demand. Once they come into this demand, once you get that shift, like what happened here, once you get it right there, you strike buys to the upside. Right. So those are the two main major pairs that I'm having very beautiful setups on currently. Boom 500. Of which those are the two main those are some of the main pairs that I trade on synthetic pairs. I don't trade every single pair. I don't need to do that. You don't have to trade every single pair in order for you to make money or reasonable money or even a lot of money. That idea of saying the more the pairs, the more the money, it's a false idea because at the end of the day, it's all about you just maximizing on those few pairs, one or two or three pairs. You just maximize on those. making sure that every major move you actually catch it and you maximize on it. So yeah, this is a major move that I'm anticipating all of you to maximize on to the upside. The Boom 500 buys as well as the step index buys. That one I gave you the signal already, so there's nothing wrong there because I've already given you the hint. That one, the Boom 500, I'll try to give it if ever I have time, and if ever it also comes to the zone while this time I'm there or present, whatever. But the signal is not given, even if the signal is not given, don't hesitate to enter based on everything that we've spoken. So this one, potentially also here, it can actually give buys right here on this level here. You can even enter buy stop loss just below this level there. Then you just hold all the way to those levels that we spoke about to the upside. So is it clear? Are we together? Are we on the same page? Are we on this? Wonderful, wonderful, wonderful. Right. So this is basically what we currently have. These are major opportunities, especially this one. Step index we're already in, and there's still also an entry opportunity on that level that I showed you. This one, very, very major opportunity. Very major opportunity. It all the while when it was trying to fully change, in as much as there were major opportunities, obviously, sales obviously the downside. If you notice here, there were major opportunities that were available of sales actually to the downside, even from these levels here. Right here, they broke there, came back for a pullback. Their structure shifted to the downside. That was a sell. Even if, let's say, you caught some of these mini buys, but they couldn't sustain to change overall structure of the upside. Then here, they came again here, they changed again, they shifted structure again to the downside. Those are sales again, major sales actually, because even the low was far, 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 far. So even here, the buys and the sells, both of them were good. They came back again here. Even if you bought here, but they didn't buy as that far because here someone could have targeted maybe that supply area or whatever, but they didn't get there. They just tapped this other supply, mini supply. Then from there, they started to go down, of which you could have still caught sales. They were still continuing. So you see, sales were much more strong from this level. Even here, this counter buys, you could have bought. Somewhere you could have bought here because this was still the same structure. You would have bought right there, you could have sold. This was still a bearish structure. So here you would have bought, but buying still knowing that we are still in bearish structure. Then there you sold, but you are selling now knowing that we are now in bullish market structure. So right here where we are coming, that's a buy entry right there on the zone. Swing, swing, swing buy that you must make very good money on. So guys, that's it. Those are the two main major entry setups that I wanted to share with you. Make sure you maximize on them, and let's make this money. Let's make some dollars.